Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor. Well, I have kind of a new little morning show. It's called Stocks in 60, and basically I want to kind of show you kind of what I'm doing on a daily basis, kind of how I'm setting up trades each day. And the market is, is starting to formulate the Biden potential win, and it looks like some of the EV stocks, Tesla is doing well, but there's a interesting play that I made. It's on a company that is kind of related to EV stocks, but is not an EV stock itself, and it's a company called BLNK Charging. And this company, basically, what they do is that they have charging stations throughout the United States. As a matter of fact, they have 23,000 charging stations worldwide, and also they're deploying them everywhere. And they just did a deal with Burger King to put charging stations in here. Well, I've had this stock since last year. I've wrote it up. It's doubled twice, and I think it might also break out. But I have a very interesting play that you might be interested in on this particular stock, and that is it's a covered call play. And I just did this. This is pretty much the exact way I played it. I played it this time. So let me kind of show you kind of what I'm talking about here. This is the chart. This is the current chart for BLNK Charging. As you can see, it's just moved up very, very strongly. It's got a relative strength of 99, and the funds are starting to move into it. But here's the thing about the stock. It is essentially a relatively thinly traded stock, but it's moved up very nicely. The funds are now 20% in it, and typically many stocks make their biggest run from 20% fund ownership on up to about 65. It's right at 20, so kind of interesting. Might be making a big run. There's only 32 million shares, which isn't really that many shares. Now today I bought it at 46.74. Now I was also adding to a position that I already have, but what I did to kind of hedge my bet there was that I basically I basically then immediately sold a call option on this, and I kind of want to go through that with you, sort of how it stacks up, so you might get an idea on that for you as well. So here we go. Today I bought 100 shares at 46.74. Then I immediately sold a January 50. A January 29 50 call. That means it expires on the 29th of January, 22 days in advance. The proceeds that I got from this sale, basically at about 10 o'clock Eastern time, was a 505, which is basically, it was quoted at 5.05 for one contract. I sold that. So I sold the right for somebody to buy it from me for this $50 price. If you look at the upside profit, which is the difference between the price that I bought it at, basically for $46.74, of course, times 100. And if I were to sell it in 22 days at $50, basically the contract would have been exercised, and my upside profit there would have been $326 for a total potential profit of $831. Now I keep the option premium regardless, but if I'm called out, I will get this upside capital appreciation as well. So if you look at this on an annualized basis, the return on the option here is 10.8%, and the return on the upside about 7%, or a annualized return of about 295.3%. Now, I don't always get chances to make trades like this, but these are the kind of trades that I like to make. Also, I run a show, a question and answer show, which is available every day on YouTube at 2:30 Central Time. It's called Dallas Trading Floor, and I hope to see you then. Oh, wait a minute. I do have one question. Hey, thank you very much.